Hi everyone, this is Rihanna from A Frugal Life, and today we're going to be talking about 12 big money mistakes that you're making that might be keeping you poor. So there are a lot of videos out there like this, but most of them are entitled Money Mistakes I Made When I Was in the 20s, Money Mistakes You May Be Making as a Millennial, Money Mistakes You Are Making When You Are Young. I'm here to tell you that it doesn't matter what age you are, money mistakes happen. So let's talk about those things that might happen in your financial life that you can turn around very easily and put yourself back on the right track to financial stability. So the first thing you might be doing, which is getting you off track, is actually not making a budget. So making a budget is something everybody says they should be doing, says they maybe even are doing, but most of the time people aren't actually doing it. So making a budget is very important. There's so many different ways that you can do it. There's a Dave Ramsey budgeting system, there's a traditional budgeting system, a zero-based budgeting system. Take a look at the different options that you have out there and pick one that works for you. So there are many budget gurus out there that say they have the one budget that will work for everybody. I 100% believe that is not true. There are different budgeting systems which work with different lifestyles and different personality types. So you need to research all of the different budgeting systems that there are out there, whether it be paper or digital, whether it be Dave Ramsey or something else, and figure out the one that makes sense to you. Some people like keeping a budget on paper. Some people can only do things via an app. Some people need somebody else to keep the budget for them and tell them what to spend and what not to spend every month. So look into all of the different versions. Google and search YouTube for budgeting systems online. Do your research and then sit down and make a budget with your partner. It is very important that you know how much is going out, how much is coming in, and what your financial goals are for the future. Once you have that all down on paper or on an app or on your desktop, you'll be able to follow a set track and plan, and the stress with money will just go out the window. Now, talking about making a plan with your partner, you do need to be on the same page as your partner at all times with money. So this is number 2. And after being together with my husband for 25 years and being married for almost that entire time, I can tell you that we weren't always on the same page money-wise. And whenever we were off the page and off on a different track or on different opinions or different sides of the fence, whatever you want to say, our money woes were huge. So being not on the same page with your partner is number 1 biggest mistake you can make besides not having a budget with money. You definitely have to be in agreement with your partner on big financial goals. You have to decide on a budget together. You have to be in agreement with what you're going to spend and what you're not going to spend. So if you're not on the same page, or one of you feels that you're not on the same page, make a plan, make a date night, eat some good food, sit down with a budget planner, whichever one you've decided to use, paper or digital or what have you, and decide on your financial goals, decide on how much you're going to spend, decide on what are your priorities as a couple and not priorities. And if you have a different priority than your spouse or your partner, then you need to make an agreement about what you're going to do with that. So maybe you want to buy something that they don't want to buy, and that comes out of your personal allowance or your personal entertainment budget that you've decided on. Maybe you have agreed that you're both going to get something that only one of you likes because you're agreeing to make a compromise there. So there are lots of different compromises you can make, lots of different agreements you can make. Just make sure that you are both on board with that plan. Number 3 is important, and that is don't co-sign a loan with somebody unless you're willing to take on that full responsibility. So I know people who have signed big loans, big educational loans, big other loans, and had the person default and not pay them back. So it is very important that you do not ever co-sign any sort of loan, even if for a family or a friend, unless you're financially prepared to take on that entire loan and the payments by yourself if you have to. So you don't know what's going to happen down the line. Your best friend now may not be your best friend 20 years from now when they're still paying the loan. Your neighbor now may not be your neighbor 10 years from now. They may default on the loan and leave you carrying the bag. They may default on the loan through no power of their own if they lose a job or something like that. So it's okay to co-sign a loan, obviously for your spouse or your kids, because you're probably going to be willing to take on that amount if you have to in the future. It's not okay to co-sign a loan for somebody that you're not committed to being with forever, or that you're not committed to paying that off if you have to down the line. So a big money mistake people make is co-signing loans for family or friends when they're not prepared to take on the entire financial responsibility. I will give you an example of that. I have been married to my husband for 20 something years, and he has a $20,000 plus $20,000 plus educational loan that we've been paying on for a long time. If something were to happen to him, if he weren't to be able to make the payments, if for some reason we were not together anymore, I know that I would be fully financially responsible for that payment, whether he was around or not. So I was willing to co-sign that loan because we were married, and I knew that I would take on that responsibility no matter what. So be sure you're not co-signing when you shouldn't be. Number 3 big money mistake is not having an emergency fund of any kind. So I do have a video I will link up above on how to save an emergency fund even if you're on a low income, and whether your emergency starts out as $100 and moves to $500 and moves to $1,000 and more. Does not matter where you start with your goal, just start with something. So be prepared to start saving a little bit out of every paycheck or every amount you get in the side hustle so you can start saving that emergency fund for something bad that happens. My husband was in the hospital for 5 days this year and lost a toe due to diabetes. And we had a bill of over $100,000. Luckily, the majority of that was paid by our medical insurance, and I will talk about that later on down the line. But we did have some big amounts for things that were not covered by insurance that we didn't know would not be covered by insurance, and my parents had to help us out because we did not have a big enough emergency fund. So you can have insurance, you can be completely prepared, and still have things come up that you have to pay for. So start saving your emergency fund now. If you don't know how, click on that video down below or up above on how to save for an emergency on a low income. It's great for anybody on any income. Number 5, and I know I said this was for any age, this is for any age. The mistake is not having a retirement fund. So I have made that mistake, and I'm here to tell you it is a bad idea. So when I was younger, I actually put away 25% of my income for over 5 years. And I had a big chunk that I ended up taking a loan on and spending on my husband's education. As you know, I just said he has loans now. We spent it on moving out of the state. In order to pay for us moving out of the state, I had to take it out of my retirement fund. It wasn't an investment in his education, but I do regret that I took such a big loan. And now I don't have that in my retirement for later. So no matter what, do not touch your retirement fund. It doesn't matter if you are 19, it doesn't matter if you're 18 or 17 or 55 or 75. If you don't have a retirement fund, start saving now, because down the line you will have more. Even if you're starting to save later in life, at least you're starting to save now. Having something is better than not having anything. And if you're young, grab onto the opportunity now to start saving a retirement fund. It is so important to have money in the future to take care of yourself. My aunt actually had a stroke in her 70s, and she's not able to work, and she doesn't have anybody financially to take care of her. Her husband passed away, and because she had a pension, she does have a pension and Social Security now, which takes care of her financially, and luckily she's able to live with us. But if she did not have that pension, then she would have no way to take care of herself, because Social Security is not enough. So make sure that you are putting away a retirement fund. If you don't know how and you want more information on it, post a comment down below and I will try to add that to the schedule as well, how to save for retirement. And number 6 goes with this, is not matching your 401k. So number 6 big money mistake is not matching your 401k. If you have the opportunity with an employer to have them match, be sure that you're maxing out at least the match amount. So if they match up to 2.5% of the money that you put into your 401k, you need to be putting that 2.5% in there so that they will match the entire amount, because the difference down the line is going to be huge. That's double, right? That is free money that they're just throwing into your pocket and then exponentially growing through a retirement fund. So if you have a max up to 10%, work it out so you can contribute 10% of your income to retirement, because they're matching it. It's crazy. It's free money they're just throwing in your lap. Do not throw that away. Number 7 big money mistake people are making is not having financial goals. So even if you budget, even if you're putting away retirement, if you have no goal you're working on, you're not going to get there. You cannot get to a goal that does not exist. So I'm going to be doing a vision board video in the future, which is going to help you set some goals and visualize them and put them in a picture format, which you can actually see and follow. But for now, think about what goals you have. So they can be as small as putting away your $500 for your first emergency fund. They can be as large as buying a car that you've always wanted, or going on vacation that you've always wanted. They can be as large as buying a house. So make sure that you have all sorts of financial goals that you want to reach. Start with some big ones, get some medium ones, get some small ones, break them up into chunks, start some sinking funds for these goals. It's important to have financial goals, because if you don't have a goal, you can't make a roadmap to get there. So people make the mistake of not having goals and just living willy-nilly, spending money, earning money, and not focusing on what that money is going to do for them. So if you have financial goals, you will be so rewarded when you actually meet them. And number 8 big financial mistake is racking up the credit card debt. So we have a video about getting out of debt I will put up above. It is very important that you don't rack up all kinds of debt that you can't pay. You don't want to be racking up $30,000 worth of debt on various credit cards and things, and then not paying it off and end up paying minimums. You'll end up paying 30% or double for the item after years and years worth of credit card payments and interest rates. So avoid the credit card debt altogether. Avoid the debt that you don't need altogether. Don't spend on things that you can't afford if they're not necessities. So of course, if you have to put a hospital visit on a credit card, you have to put a hospital visit on a credit card. If you need a vehicle, you don't have a vehicle at all, and you need to purchase a vehicle on credit, of course you're going to purchase it on credit. But there should not be a reason that you're buying things like clothes or accessories or vacations on credit and then paying the minimum payments on it. Don't buy things you can't afford. Use sinking funds instead. I will talk about that in a later video, but you can also Google it. Google sinking funds. Save up for things that you want instead of buying it now and paying interest on it later. Number 9 is not being adequately insured. I am a huge believer in insurance. Some frugal living experts do not believe in insurance. I am not one of them. I think you should be insured for anything. If you live in a flood area, you should have flood insurance. If you live in a fire area like I do, you should have fire insurance. You need renter's insurance. You need mortgage insurance if you own a house. You need homeowner's insurance if you own a house. You need car insurance. If you live in California or some states, you have to have car insurance. And most importantly, you need health insurance. So do whatever you can. Get the right job, or pay for it out of your own pocket, or use Covered California or whatever the state offers, but cover yourself in case of health emergencies. I am here to tell you, do not know what is going to happen. It does not matter how healthy you are. You can get hit by a bus. My husband, I had just said, had a $100,000 hospital bill that we would never have been able to pay, and would have absolutely ruined us without health insurance. So if you need some ideas about how to get health insurance because you are on a low income, go ahead and put a comment down below, and I will try to help you with that. But be sure and make sure that you are adequately covered for all events and all things that may happen. Insurance is important, and the premiums are worth it. I know they're expensive, but it is worth it when it comes to your health. It is worth it when it comes to not losing a home or a car. It is worth it for your financial stability to be adequately covered with insurance. Number 10, people pay too much in bank fees. So this is a small one, but it is a big mistake, because there are enough banks out there, both online and off, that will offer you free bank accounts. You can get free savings accounts, you can get free checkings accounts, you can get free money market accounts. You can get all sorts of free accounts without paying nothing to pay extensive bank fees. So you shouldn't be paying all kinds of extra fees for things like ATMs. You shouldn't have to pay super high fees for overdrafts. There should be bank accounts out there that you can get. There are a couple bank accounts I will put down below if you want an online one that has low fees or no fees, or if you have a local credit union, they are great for fee-less or low-fee options. Just make sure that you are auditing your bank accounts at least once a year and determining whether there are fees you can cut out. If it's the wrong bank, change the bank. You do not need to remain brand loyal to a bank. Believe me, they make enough money. They don't need your money. They will be okay if you bank hop to another bank for less fees. Number 11 goes along with that credit card debt, but it goes for any debt. If you have a large house payment, if you are paying off several cars, if you have any kind of debt that you have lots of payments on, you should not be spending a whole lot more. So one mistake people make is ignoring the debt they have and spending more on top of that. If you have credit cards to pay off, do not go to a mall. If you have a car to pay off, don't go and get another car payment you don't need. So unless you can really afford it, and putting money in the hands of somebody else doesn't matter to you and you're financially stable all around. Don't rack up the debts. If you are overdrafted or past due on any debts, you should never purchase anything more until you pay down those debts. So it's okay if you have some debt. It's okay if you remodeled your kitchen. It's okay if you did something important that you thought you wanted to put on a credit card. But it's not okay to go overdue on those debts and then rack up more. Don't ignore the debts you have and create more debts when you should be paying off the debts you have. Number 12 is an easy one, applies to everybody, and it is something that I think about all the time. It is do not pay full price for anything. There is so many ways you can get everything at a discount. It doesn't matter whether it's the camera that I am filming myself on, the car that's in my driveway, the house that I purchased, the groceries in my cupboard. I never pay full price for anything. There's rarely anything you can't get, either used, discounted, with a coupon, or negotiated. So make sure whenever you're purchasing anything or renting anything, you're either negotiating, asking for a discount, looking for a coupon, or buying used, or even borrowing, or something like that. So make sure that you're not paying full price. It's a huge money mistake people make. There are enough people out there paying full price in the world. It shouldn't have to be you. Make sure that you're getting the best price for your item. So again, I'm Rihanna from A Frugal Life. The best thing you can do to thank me for my videos, if you did like them, is to like it. Please subscribe so you don't miss our further videos. And as always, I love you so very, very much. Please comment down below if you want to talk to me. Thank you. Bye.